Talking about Tongaat-Hulett, let me try that again. We're talking about Tongaat-Hulett, which Hulett, what's wrong with me? Hulett.
That's correct.
Hulett, which has 4 business divisions: sugar, starch and glucose, and property development as well.
Yeah, this company hasn't really done much for us. 10 years, 5 years, the share price is basically flat. But yes, all those things, and of course sugar is consumed often, and then also the coffee creamer.
It has a market cap of 15.1 billion rand, a PE of 13.1, dividend yield here of 2.7%. Again, let's get that chart up.
Oh, there you see it. But to be fair, sugar, which is the main part of the business, has had good years and bad years, drought, pricing, import, lots of excuses.
And so the agriculture exposure here as well, subject to droughts, etc., etc., etc. Because obviously sugarcane. You look at me as though I'm making some strange correlation.
No, it's true. I guess Tongaat-Hulett is a sugar company, but again, yeah, the majority of its revenue coming from the sugar and starch businesses. But that's, I mean, there's a very good argument to make. That's not where the value of this business is at all, and it's entirely the property portfolio that you should be looking at. I mean, sugar prices, as Paul said, are very cyclical.
Explain the property portfolio.
Yeah, I think if that's the majority of
cane lands around the Greater Durban area,
exactly,
which get converted,
and they get converted, and I mean, I think in the past it's been a little bit more opaque on how they were going to unlock the value. In recent years, management has been more forthcoming on how they're going to develop the land. And I mean, I've seen estimates from some of the houses saying that this is going to generate about 2 billion in revenue for them each year, and that fairly consistently.
You're talking about now the cane fields.
The development.
So
of the
I've got a question for you. Being a farmer's daughter, what about land grab situations and how that could impact to this company?
Absolutely a concern. Yeah, very, very much a concern. And I think, that's there again. You're taking a view on South African Inc. and what's going to happen in South Africa. So again, I think the argument would be: is this not in the price? I mean, if you look at it, a forward P on the stock is only at around 9. It's a market cap of 15 billion.
So that risk you're saying is priced into the stock already?
Exactly. I mean, if let's say there's no land grabs, because I mean it's a very binary outcome. Either you're going to have land grabs.
What do you mean by land grab, where you have illegal occupation of the farmland?
No, as in claims against land claims.
Yeah.
Exactly.
So there's a whole lot of different things.
If South Africa goes away, where we no longer protect property rights,
we go the Zimbabwe route, which has been talked about extensively,
and I don't think I think is a valid concern. So looking at that, though, I think you've first got to make a decision on whether you're in for SA Inc. or not. If you are in for SA Inc., if you think South Africa has a bright future, this is a very, very cheap entry point.
Are you in for SA Inc.? We've got to call it?
Yes.
You're hot.
Yeah,
hot.
I'm going to go hot on Tongaat.
I think I'm going to pass just because of the variability on the sugar side of things. I accept that Durban comes and goes, and in this instance, spreading north, that's fine. But it hasn't always been clear to me that you can capitalize that on the short term.
So you're not hot.